Welcome back. So almost 10 a.m. Let's take the technical calls. The market's message is that the gap up has been sold into, especially on the bank Nifty. Mitesh and Prakash now with us. Mitesh, slightly disappointing for the bulls, especially on the bank Nifty and the way it's sort of come off rather rapidly in the last 15 minutes. Your thoughts and your stock calls now?
Morning, Anuj. I think, again, as I said, I think it's still a consolidation phase, so you will not see strong gains kind of continue and profit booking close to about 32,500 on the bank Nifty and 12,280, 250 zone on the Nifty. I think would repeatedly happen. I think we're still in that market, which is yet to get into directional mode again. So wait it out. Till then, I think try to trade more stock-specific basis. And the calls that I have right now are a buy on Jubilant Foods with a stop at 1640 for targets of 1700 and a buy on JSW Steel. Keep a tight stop at 268 to look for targets of 280.
Okay, yes, steel has done well, metals have done well. Prakash, good morning. Happy New Year. What are your calls?
Good morning, Anuj. Happy New Year to you and to all our viewers as well. It's a great feeling to be here on the first day. Well, I would say that there, like you said, there is a diversion between spot and futures. But when I look at Nifty and Bank Nifty, Nifty gives me some kind of a relief and looks like it may not be that bad. And perhaps later part of the trading day, perhaps we would see a bounce back into Bank Nifty as well, or maybe some strength. But largely it's a sideways move, but downside seems to be capped, it seems. I have two stocks and both on the long side. RBL looks good to me. Very good chance we can see RBL climb to around 355 zones, stop below 346. And I also like Mindtree. Possibly we'll see an up move here. Target on the upside on Mindtree is 850, maybe a day or two in that. Stop below 800 should be fine.
All right, Prakash and Mitesh, thank you very much for giving us your 10 a.m. trades. Well, let's now invite a very important corporate giant. I'm speaking about Shree Cement's management. The stock has given 1,000% returns in the past year, decade, 982% to be precise. And in 2019 itself, it has given a return of 18%. H.M. Bangur, Managing Director, Shree Cement, joins us. Good morning, Mr. Bangur. Thank you very much for joining us. Well, first up, I want to ask you about whether there is an immediate improvement, because the core sector numbers indicated that cement grew by 4.4% in November compared to minus 7.7% in October. Could you see improvement?
This October and November, these things are relatively much related to festival season. So we must see October and November together. Last year Diwali and this year's Diwali are in different months. But when we see the overall up to November, the core sector cement is almost zero.
Oh, yes. That point is
the
taken.
growth is not there as such, but still I will say green shoots are visible.
Okay, that's good to hear on the first day of the new year, Mr. Bangur. Thank you for joining in and Happy New Year to you as well. Now, we were getting some sporadic reports also about possibility of price hikes. Now, after the monsoon, have you been able to hike prices at all? And what's the outlook?
In fact, in last 5 months, the cement price has not improved at all. It has come down, and it is right now not any higher than last year, though inflation has taken place. But similarly, the things are that fuel price also have come down a little. So overall, the situation is not that bad. Basically, till the economy doesn't improve, that is, the GDP number doesn't improve much, say 6 to 7%, we are accustomed to this. Otherwise, 5% also is not that bad, but we are accustomed to 7% plus. So for us Indians, the norm is 7%.
You mean inflation?
No, I mean GDP growth.
GDP growth. Okay. So, but you said green shoots, sir. What exactly did you mean by that?
Only yesterday, it was announced by that 1.2 lakh crore or so will be spent on infrastructure. So we feel that now government is seriously attempting to improve the economic outlook. They want to spend more on the things. Okay. So I am feeling positively.
Okay. So is it only these announcements? Did your retailers ask for more stuff in December?
No.
Could you see any green shoots in that sense?
Yes, December sales were a little better compared to November, and so positive growth signs should be there available in this December also.
Okay.
And I expect from April onwards this year, because of the backlog and other things, may not be that good. But from April onwards, I think with positive growth of 6 to 7% in cement demand.
Okay, so cement demand 6 to 7% April onwards. But before that, sir, how will you end the year in terms of volumes? Because Nigel tells us that your total sales volume target was around 26 to 26.5 million tons. Are you at least on track to achieve that? And also your capacity utilization levels?
No, we will be slipping in the volume.
Oh.
And ours will be about 25.5 or so.
Okay. So capacity utilization is running at what?
Capacity utilization will be running at 70%, but that is not important because we are continuously adding new capacity.
Yeah.
So absolute volume is important. New capacities will come into full force, maybe whenever the capacity is put 1 year later or so.
Okay. You said prices have not risen in this December compared to last December. How will margins do, you think, in the second half?
Margins will not be worse than the first half because the specific numbers I will not like to say.
Sure.
First half our EBITDA was roughly 1,800 crores. So we will end up almost on the similar note.
Okay. All right. So what gives you that confidence from April? Is there anything? Are you banking only on these infrastructure orders? What other things are you counting on?
No, infrastructure orders is one thing. And secondly, whatever government does, it takes time. With a lag of 3 months to 6 months, the effect is there.
Okay.
Now the buildings or the housing sector also is at the all-time low, I will say, and things will only improve.
Okay.
Their inventory is coming down.
Okay.
So overall, the demands will be there.
Okay. Well, it is a sluggish marketplace. There's no denying that, sir. But these times are also good to sort of, look at out-of-the-box things. Emami Cement is on the block. We know that. Are you interested? Does your balance sheet have the might to, stomach something like this?
Of course, the balance sheet has the might, and we have also looked at the things. So, there will be many shooters and only one winner. So we will come to know about it once the bid is open.
But just to understand, okay, so you are interested in Emami Cement. So therefore, it's important for me to ask you your current gearing level and to what extent are you okay with leverage? I mean, you'll have to raise some money from the market. You'll perhaps have to borrow for this acquisition. And how much could be cash internal accruals?
There will be zero borrowing either from the market or from the bank. We have more than 4,000 crores in our balance sheet sitting on cash.
Okay.
So there is no leverage, no gearing. And even after purchasing Emami, if we get, there will not be any debt on the balance sheet.
Okay. Any improvement in power, sir?
No, power situation this year, the overall power demand is negative and we are not able to run our power plant fully.
Oh, okay.
Maybe that because of the good monsoon, hydropower was good, overall demand was low. Only if the GDP increases, power rates will increase. Power rates are not good.
All right. Okay, Mr. Bangur, thank you very much for taking our call this morning. You have been a big wealth generator in the decade gone by, and we hope that you will continue to be that in this decade as well. Thank you for joining us.
Thank you.
A quick look at the past 3 years of Shree Cement financials. First, you'll have the revenue picture, done very well, excellently well in FY19. And that's the EBITDA picture, steady as she goes. And let's take a look at the valuation as well. It's been rewarded for its performance. It is a slightly pricey stock. We'll take a break on that note, and now we're going to come back with Shyam Srinivasan, Managing Director and CEO of Federal Bank.
Hyundai presents Be the Better Guy, a road safety initiative. Bank of India wishes you a very happy new year. Bank of India, relationship beyond banking.
100 सालों से रिश्ते निभाए, हमेशा ये रिश्ते बनाए, बात बकरी चाहे, चलो 100 सालों का जश्न हम खुल के मनाए, बात बकरी चाहे,
वाघ बकरी चाय, क्वालिटी बेमिसाल, निभाए 100 साल.
20 years of leadership in business and beyond.
The markets are still in slightly green mode, though there has been selling in the Nifty Bank. So that's why we have a surfeit of bankers on day one. Joining us now is Shyam Srinivasan, Managing Director and CEO, Federal Bank. Good morning, Shyam. Thank you very much for joining us. First up, wish you a very fruitful, healthy and happy 2020 to everyone at Federal Bank. For starters, how is the year ahead looking like? Does it look like we will do better in terms of, banks will do better in terms of loan growth and margins?
Yeah, firstly, best wishes to everybody in the channel and across the country to follow all of them who are watching. I think I entered 2020 with a lot more optimism. You may quickly ask why, and that's I think the trend lines that we've seen in the last few months in certain segments give confidence that probably the bottoming has happened, and even in the area of recoveries I see some progress. So I would like to believe that 20 will look better. Now whether it's across the board, across all segments, only time will tell, but we carry a more optimistic outlook for the calendar year. Time frame, maybe it'll be a multi-speed. The first half will be a little slower, but I do think it will start looking better by April, May, around that time.
Okay, well, we'll hold on to that, sir. Thank you for joining in. Good morning, season's greetings. Wish you a very, very happy new year. Just before you joined us, we were having a very detailed discussion on the woes of the infrastructure sector, and the woes really, boil down to one thing, and that's money. What have you made of some of the measures that the government announced yesterday on, pushing forward this 105 lakh crore rupees worth of projects? And a lot of people seem to complain that LCs and guarantees are not easy to come by and bankers are hesitant to lend.
See, I think the initiatives announced yesterday are quite noteworthy. It is going to stimulate. Of course, there will be a time lag and it's not going to be a sort of on-off button. You'll instantly get all the momentum. But it signals some optimism, signals heavy activity. In terms of bank lending, I still think, and I've said this many times on your channel, for the good, for the discipline, there's a lot of lines of credit that is available in any form. We've seen it in Q2, we've seen it in Q3. The damn good customers who have been consistently performing well are getting lines of credit. And I think it goes back to discipline and borrowers having to perforce looking at how they establish their credit behavior. We've been long used to some indiscipline, and all this churn is helping or focusing people to get a lot more discipline. And we are seeing it even in the small and medium establishment clients. Those who have remedied, fixed their books, have been a little more honest about their bookkeeping, particularly post GST. I can see that happening, and there's, I think, the fluff that gets noted as noise across. A lot of good stuff is happening beneath, and we've seen it in our portfolio the last 2-3 quarters in terms of discipline coming back coming up in some of the customers, and we'd be only too happy to lend. Yesterday, I received back 400 crores from a top quality corporate because they've got so much money coming up. So I don't believe that it's universal. Yes, there are layers of the market, and the treatment is very different.
No, Shyam, one of the cribs was that government doesn't release its payments on time. And then the receivables accumulate even for good companies. And beyond a point, banks are not willing to fund those receivables. Is there a problem of delayed payments that is accumulating?
Yeah, I think that there is some, but every now and then we do hear from the ministry that they are clearing out backlogs. Some pressure is required on that front to ensure that it comes out. There was one set of payments that came out in November, unclogged a bit of the pipeline. We believe that in this coming month, you will see some more payments coming out. Yes, that factor of government payments getting delayed does hold true, but I did see some traction in November, and we believe that you will see some more in the coming months leading up to the budget and beyond.
Okay, Mr. Srinivasan, on to a different subject now, and that is transmission, the RBI's favorite topic, I guess. Out of the 135 basis points odd that we've seen in the last 12 months, how much do you think you have transmitted? And it's had an impact on margins. What should we expect this year?
The challenge for us in particular, our strength seems to be our challenge. We are a largely retail funded liability franchise. You may notice that 95% of my book is retail funded liability, very granular. So I don't have much market borrowings. So when the market rates fall, it doesn't dramatically alter my cost of funds, right? So to that extent, to match up with the SBIs and the other big bankers, you end up compressing your lending rate just to be competitive. So to that extent, there is a pressure on margin. We've guided for somewhere between 310, 315 that we believe we will hold. To your other question, how much of the transmission has happened? I think about 40 odd basis points of drop has already happened. And I believe in the coming quarter, you will see some more reduction. And that's where it will sort of peter off. If the small savings deposits and others don't drop down, I don't believe banks can just generously keep dropping out deposit rates. So I think it'll sort of sort out at this point, and people have to play the margin game more smartly.
Okay. Are you convinced that for the system as a whole, growth will improve? I mean, the Union Bank MD was saying that now deposit growth is in double digits, so it can't be long before credit growth picks up. But the GDP growth numbers are not telling you that. Do you feel pretty confident that credit growth will pick up?
At an industry level, hard to call yet, Lata. Usually Q4 is the more than 40% of the growth. So if that sort of comes back, you will see, I think I mentioned earlier also to you, you may see a 10-12% growth. At this point in time, it looks lower. Ours, I've been maintaining, I think we are growing in the high teens, and if you have a great Q4, it may even touch a higher number, but we're in the 2.5 times market growth is where we are growing, but we're gaining share quite markedly from so many players who have other challenges.
Okay. And the other big talking point for banks is that the Reserve Bank Financial Stability Report expects that in the next 1 year, NPA levels are going up from 9.3 to 9.9%. Any comments on that? I mean, it took the market by surprise.
No, we must believe that it is probably the recognition of the 2-3 very well advertised big NBFC challenges which have to be that significant chunk, right? I can't believe there are beyond that unrecognized new names. See, it could be a timing issue of some banks recognizing it in a delayed fashion. But I don't think it's creation of new NPAs of scale and magnitude that is differently from what we've all seen for so many quarters. I would believe that those are, because this is a September data, in December you will see some one or two those big names which are 70,000-80,000 crores which have challenges will come through. So that could sort of twist the number a bit.
Okay.
There's no underlying reason to believe that there are going to be materially more new names cropping up.
Oh, right. Maybe they're worried about telecom as well. I don't know what the RBI was thinking. Yeah. Thank you very much, Shyam Srinivasan, for joining us with your take on what to expect in 2020. Have a great one yourself. Thank you for joining.
Thank you very much. Thank you. All the best.
We get into a break, and we're coming back with the Power Secretary, Sanjeev Nandan Sahai, to talk to us about improvements in the sector and the big promises made in that infrastructure pipeline paper that the Finance Minister presented yesterday. We're back in a minute.